Yeah, in the infrastructure provider, I have my own database where I track the different providers. I think just for banking, it's something like 30 names or something like this. But it's Europe. With passporting, you can cover a lot of different European countries, but then very often you want local bank accounts with a local country code at the beginning.
Dear friends, ladies and gentlemen, I'm excited to announce this podcast with Lars Markull. He's a very unique and very special, specially equipped gentleman with the knowledge in embedded finance. So he's an embedded finance consultant, and he helps companies to design and launch financial products such as payments, banking, lending solutions, and many others. He works mostly with non-financial businesses that are looking to tap into financial services to unlock new revenue streams. And he's also a famously known founder of Embedded Finance Review, which is a newsletter and podcast about the embedded finance overall. He has a lot of experience in fintech infrastructure. So Lars, welcome to our podcast Ventures from the Valley, which is brought by R136 Ventures, and I'm Victor Orlovski. Nice to see you. Nice to meet you here.
Yeah, thanks, Victor. Thanks for having me. Looking forward to the discussion, and also thanks for the kind intro.
Absolutely. So let's start with the basics. What is embedded finance? What is it? How would you best describe it?
For me, I have when I do presentations, I have a couple of slides that I use very often. There's one slide which is the definition of embedded finance, which is when brands seamlessly embed financial services to create customer value. And to pick on a few words from that statement to make it a little bit more understanding. The first one is brands or non-financial brands. That means embedded finance can be done by a company like DHL or Lego, but cannot be done by Revolut, HSBC, or any other financial institution. So I would say the magic about embedded finance is combining the financial world with a non-financial world. And in almost all cases, it's done by a non-financial brand that's embedding financial services. So the first one is it has to be a non-financial brand. The second point is seamlessly embed or seamlessly integrate. I think in the past, we all know it in the fintech world, or maybe also in other industries, you have partnerships, referral agreements, and all these kind of things. For embedded finance, it's extremely important that this is one customer journey. It's not about clicking here on a link and get an offer from our partner where you have to re-enter the same information again. It's a kind of Shopify capital experience where your data is already in the system. You click on request funding, and you get the notification directly after it without any further steps necessary. And the third part is create new financial products. So specifically excluding open banking, open finance here, it's about equipping that customer, which can be a consumer or a company, equipping them with a new financial product, means a new card, a new bank account, a new lending product, and not just take an existing bank account from, let's say, a traditional bank and integrate them into the service. While this can also be great, it very often limits functionalities and features and revenue potential for the non-financial brand. So yeah, my definition, three elements that are important.
3 elements. So all 3 elements should be to market, right? To
Exactly.
say this is embedded finance, right?
Yeah.
If one of 2 or 2, one of 3 or 2 of 3, this is not classical embedded finance, right?
Yes, I would say so, but I would also say, and I'm joking sometimes a little bit about that, like 50% of my time, I'm kind of being super pedantic and saying this was the wrong term. This is not embedded finance. And the other 50% and who the hell cares? I mean, the customer doesn't care if it's embedded finance or not. What the customer cares about is that their problems are being solved on the products they like, right? So even if companies are not embedded finance, doesn't mean they are bad companies, right? So there are a lot of great products out there.
Maybe you can start with some examples. So who has pioneered embedded finance? Likewise, when we call some of segments of economy Uberized or Uberization of economy, when we mean first delivery and second dynamic pricing. So was there any kind of a classical case? Okay, these folks really pioneered embedded finance, and that's what we did. That's what they did. So if you may just give some examples of that.
I mean, yeah, sure. A couple of examples. I think if you want to put it on a, let's say, historical angle, like who was the first company ever to do embedded finance, there we actually, I would say we have to go a long time back, because arguably the first embedded finance implementation was the car financing at the car dealership, not in the digital world, but going to a car dealership and getting a loan integrated. So that's in the car purchase. I saw just the other day in Frankfurt, I hosted an event, and one of the speakers had a picture of a car contract. I think it was from 1920, where in the car contract was basically the loan details integrated. And you can argue this was basically the very first embedded, or one of the very first embedded finance implementations. And here you can already see the mindset, the DNA of embedded finance. The car dealership is not really a bank, and they don't really, I mean, maybe they want to make money from lending if they were doing it themselves. Maybe that's some kind of like relevance to them. What they really, most of them really care about is selling cars, and making this as easy as possible, right? Obviously, you could always pick your car, go to the bank, get the money, come back, right? But probably the car dealer doesn't care what you do as long as you buy the car, and that's basically the important piece, right?
But what if bank doesn't give a car an auto loan, right? And then what you do? I mean, then this customer is lost forever, right? So customer has to make a decision here and now, right?
Yeah. That's true. That's true that you, in a way, you can also, as a brand, or in this case, a car dealership, you can speed up the purchase. The customer, as we say it in sales, right? If somebody's willing to buy, don't put any obstacles in the way. Let them buy. So obviously, if you can do the financing right on the spot, then obviously this can be a helpful tool as well. But yeah, I think this is like when we talk about like the very first embedded finance implementation, very often like the car loan at the car dealership is the first ones. I would also argue that embedded finance, I mean, hasn't been hot, or like hasn't been that much in focus in the last, since the 1920s. Embedded finance has not been that hot, right? I mean, it's become really, really hot, I would say, in the last 5-6 years. For me personally, I've been working in fintech infrastructure now for a bit over 10 years. 2012-13 is when I started in this industry. And I think my focus on embedded finance really started like 2019, 2020. I think we can also point it to when Angela Strange and Matthew Harris have written their thought pieces around every company will be a fintech company. But I think what happened at the same time, or we all know what happened at the same time, especially at the beginning of 2020, is COVID. And I think while COVID was not necessary for embedded finance to grow, it has had a very, very strong impact, because we know that companies like Shopify, like Toast, and many other also in the US, or mostly in the US, have understood that their merchants, their customers are struggling to consume financial services because banks being closed. And that's basically, I would say, the current wave that we are in embedded finance that probably started around 2019, 2020. And I think if you ask anybody out there in the embedded finance ecosystem who is a role model, then probably Shopify and Toast are very common examples for companies also who make 80-90% of their revenue likely with financial product. Different financial products, not just one. And I think these are the typical role models.
Maybe we can just explore it a little bit further. So we started with auto loans when you can receive a car loan right at the dealer center. And that's pretty common, right? I mean, we even don't think of that to be kind of a innovation or something, right? It's so natural.
Yeah.
What if, what are the, and then you just mentioned that at the end of the day, like every company must be a fintech company. So like it will be embedded everywhere.
Yeah.
Likewise, I can say that every company will end up becoming a digital company, right? In a digital era, or AI company. But still there is like an evolution. So what's the state of embedded finance, where it is now? And what are probably the obstacles of that?
Yeah.
So what are these challenges you may think of that doesn't let embedded finance grow even more aggressive?
Yeah, like first of all, I mean, like referring to this quote, like every company will be a fintech company. I guess in it's always good to make like catchy titles and having these expectations for the future. I always tend to joke as well and say like it's always easy to make predictions if you don't put a timeline next to it, because maybe in 100, 200, 300 years, all of these things will come true. Who knows, right? I think, I mean, also this title, every company will be a fintech company. There's also a question like, well, what's the definition of a fintech company, right? But I think it's quite clear for me that there are a lot of companies who can use embedded finance for their own benefit to increase revenue, most importantly, but also to provide other customer benefits. But I'm also not naive. I'm not saying like in a year or 2 years every financial product will be embedded. I think if I look at the embedded finance landscape, and you can at one look at the industry. That's on the one side where the financial products being embedded, and the other side are the financial products, right? In embedded finance, you have typically payments, banking, lending, insurance, and investment. And there are some which are very much progressed, right? I mean, if you take insurance, not really my forte, but insurance, obviously a quite logical one when you buy an expensive gadget online, or if you book a car or a travel or so on. Obviously, you're being offered by now quite standard financial insurance product in this customer journey, right? And that makes a lot of sense. So I think the insurance in that case is a good example of like the connection between the insurance world and the non-fund or the commerce world. On the other hand, investment products, embedded investment. What kind of user journeys would you personally be comfortable to talk about investment products that are not really linked to a financial institution, right? I'm not saying there are none, but I would say we can all agree that's a lot harder to make the connection, right? And when you ask me about like when coming back to your question about like what are the obstacles, why is it not everywhere yet? I would say first of all, I think that we all learned in fintech. I think maybe not everything, but almost everything in fintech is an evolution, not a revolution. So the things in the financial world is typically not like throwing upside down like in a day or two. It takes time, very often because I mean this might be a little bit like mentality as well. I'm based in Germany here, but also maybe in some other European countries. Consumers tend to be a little bit like taking their time with when it comes to financial services. Obviously, fintech is big and has picked up here for some time, but you also take some time for customers to jump on new solutions. Like neobanks like N26 have been in our industry quite hot for a very long time, but for really becoming mainstream, that took some time as well. And I think the same thing happens to embedded finance as well. And again, also embedded finance is one umbrella term, right? It really depends on the companies and companies cracking the nut. We also have seen, I know I can refer to a couple of examples here in Europe where companies also failed at embedded finance products. Embedded finance is not really like a switch of a button. Oh, I'm doing embedded finance and tomorrow it's there and I immediately reap the benefits. It's building digital products. That's complicated. Some companies also fail at it.
I would even be more strict. There are many more failures than success stories for embedded finance, right?
Mm-hmm.
We've seen so many cases when different brands wanted to say issue their credit cards under their brand. Uber famously was thinking about that for a few years and never did it. Even Walmart was trying to just have their own card, credit card, and their own payment processing. They failed due to some lobbying, and they lost the case on the governmental level. But there are many more that just simply didn't make it, right? And there are some really great cases where it really worked well. So we will speak about those which succeeded later, but I wanted to speak more about those that failed. Yeah. And if you may give a little bit of insights here, so I'm sure you're being an expert in this field, know those cases. So I would like really to explore those cases in further details. Why this didn't happen. So first, like the case, and then why this was a failure. So if you may give a few examples, like in different parts of the world, that would be very helpful.
Yeah, of course. I mean, I was just giving under in my newsletter, we were doing let's say call it like a webinar, like an online event around the topic of retailers and embedded finance. The topic of like retailers. I mean, you mentioned a couple of US names as well, but also here in Europe has been quite in the press. There have been a Swiss retailer called Coop. That's COOP. It's it's like I think the biggest or maybe the second biggest supermarket chain in Switzerland. They launched a banking product, or they announced it very, very big. Banking means card accounts. They want to do insurances, a lot more. Nothing under their own license. Everything with banking as a service and other partners in the background. They launched it like very, very. There's a lot of like buzz. 9 months later, they shut it down. Just 9 months, right? And this is a little bit of a joke in quotation mark. In the announcement where they shut it down, they said they couldn't really get the traction. And the outside view is a little bit like, okay, what did you expect in like 9 months to get out of traction? Seems a little bit like weird, so to say. There was another one also here. Yeah, so that's what I'm thinking. And the second one is example also in retailers is here in Germany, Metro. Maybe some of you know it's not just in Germany, it's all around the world. It's like a wholesaler. They also had a banking product specifically in Germany, but want to take abroad as well, where they offered a card product to the target group with cashbacks and all of that. And they had it for like 3 or 4 years before they shut it down right now. I think both Coop and Metro, they had the goal to do something. They had that basically. I think what here was the challenge that the internal leadership, the strategic change. I think Metro, the CEO changed. The earlier CEO was very supportive of 360 strategy of like adding adjacent activities to the core activities to basically build all of this. The new CEO was really focused on existing under the core market, the core product. Don't do anything else. So I think when you talk about failures in embedded finance, I think there are a couple of reasons why they fail. I would say the two most common ones is, and that was now like Coop and Metro, is there hasn't been the stamina, the commitment to really like build it, because again, it's not the switch of a button. I think Shopify is a good example. Shopify has been referred to as like Shopify as a fintech company at one point, but they launched, I think, their lending product like much before that. I think like 2016, 2017 is when the first product they launched, right? So it takes time. Even like really good brands, that take time to learn, to understand how to embed it, how to address the customer needs and all of that on, right? So if you expect like a major hit in like half a year or a year, then maybe embedded finance is not the right thing to go. That's a lot more like long term. And if you don't have the internal support, the internal conviction that this can be valuable, then obviously companies will stop their efforts at one point if they lose trust. And the other one is, I think we've seen it in the US quite a bit, but also in Europe, is obviously the infrastructure landscape is really challenging. And with infrastructure, I mean the enabler of these services, right? I mean, probably all heard about Synapse in the US of like breaking down and enabling fintechs, but also non-financial brands in their services. Here in Europe, we had like Railser and other banking as a service provider who are struggling. License revoked happens every other month as well. And obviously that makes it a lot harder as well for these non-financial brands as well to pick the right player, to build like long-lasting products. And some of them even are unsure that they're able to find the right player. And that's the reason they don't even start anything like this.
That's an interesting observation. And you obviously consult a lot of brands, right? And you are being hired to launch this embedded finance to some of the brands.
Yeah.
You obviously have a check box, like a checklist, where you just check the box. Okay, you are qualified, you are not qualified. And I'm sure there were cases you are a very responsible person to say, no, you are not going to do it, right? So it's not for you. So if you may just define whom you said no to. I mean, when you see that, okay, this is a good company, but it's not yet ready to launch like embedded finance. So when you say no, what this no is mostly like the reason for?
I mean, if you think about like some specific case, I can obviously not really like say company names or any kind of details. I would
Maybe
say
without company names,
yeah.
But I mean, what's the reason why you would advise, like, say there is a big company with an established brand, really can go and do embedded finance? And then what's the most common thing you would point out to say, oh, you can't do it, or you were not going to do it? I mean, what's that?
So this is one, I also use one of the slides in my presentation quite often, where I say like the benefits of embedded can be described as something like 1 + 1 = 3. And what I mean by that, like the each of the ones represent the financial and the non-financial offering. And this is the numbers basically are the customer value. So what the result should be if you sell a non-financial product, or if you embed a financial product into your non-financial product offering, the combination of these two things should be greater than the part. So basically, what I mean by that is you need to embed the financial products really, really well. If you're being really honest, financial products are commodities, right? And in most part of the world, specifically in Europe, also in the US and in other parts of the world, there are people who are underbanked, but very often in the B2B space, it's, I mean, maybe like loan lending sometimes, but otherwise, it's not like everybody is completely underbanked, right? So it's really about like, can you build outstanding customer journeys and customer products? And today you're not competing just against banks. You're competing against fintech companies and so much more, right? So I would say one that's really, really important is companies who just want to offer a financial product because they can. That's really, really dangerous. Like if you are just saying like, oh, I am Co-op, to use an example again, the Swiss retailer. I have so many resources, and I know 5 providers who can enable me to offer a bank account, a credit card, and an investment product. I'm doing it because I can, and I assume I have so many people who come to me to shop from me. My customers love me. I'm pretty sure they will come and use my financial services as well. And that's very often incorrect because, again, what I referred to before, customers take time to adapt new financial products. So not everybody will jump on your new product from day one. It will take time. And if you don't make a very, very strong case why your product is better than the others, it's really hard. So coming back to the retailers again, I've never done projects on the retailer basis, and I think I would be not really eager to do them because I would say it's extremely complicated to embed financial services into a journey where you go into a supermarket. Yes, you can do loyalty. Yes, you can do a lot of things, but I would say that's really, really hard. I think if you are a B2B SaaS company, a vertical software as a service business, I think here you have extreme good potential to create a really, really good customer journey. And that's very often where you say like, yeah, of course I'm not going to a bank because my vertical SaaS solution is offering me a bank account, a credit card, or a lending product, and so on. So I think this is an extreme important case for me.
Coming to some great cases of how embedded finance work, I would think about like Probably 2. In the US, I would name Amazon, who is one of the largest business lender, having like one of the best and fastest growing lending portfolios, lending primarily to small and mid-size and micro businesses that trade on Amazon platform. And obviously with a lot of data they assess, they know about those online stores.
Of course,
they can build like a perfect prediction model for loans portfolio performing and prediction on non-performing loans. So, and they have grown this portfolio quite significantly. Also, I would think of Square, which boosted its valuation from like 5 billion to almost 100, even 120 billion, I think, at some point, through just launching credit lines and embedded loans. Although Square itself is a financial product, it's a payment vehicle, like a bundle, whatever, a device through which you can pay like small and micro businesses. But again, by knowing all this data, they can be a perfect lender to their businesses, right? And that's where they make the most margins now. And so my question is, do you see any other areas where this could, like embedded finance, could be as successful as in lending And you also brought the Shopify as an example, which is another great example. So lending is pretty obvious, but are there any other cases, good cases, for example, credit cards or maybe embedded B2B finance, where the success was also visible and where you can just bring it as a good kind of example of
Yeah, I mean, like first of all, I'm happy to share maybe a few more examples that go in a similar direction or like in similar scale. But I think it's also important that like we understand, like I've been like before doing, the first couple of years in fintech infrastructure, I was working in open banking. So there was like, let's say the German version of Plaid over here where we did like open banking. And that was obviously before the PSD2 implementation, and then PSD2 implementation came. And one of the most common questions I got on panel discussions and events was like, okay, now we put so much effort into open banking. What's the one biggest use case in open banking that was like worth all the effort? And I sometimes like struggle with answering these questions for the very reason is like, for me, open banking and the same as with embedded finance, that's just like, this should be something available to any company out there and they have to build on top of it. It doesn't have to be like, what I'm trying to say is like open banking, embedded finance is not always like front page material itself, right? We're seeing in the B2B world, here in Europe and also in the US, we're seeing hundreds of non-financial brands of software companies that are doing embedded finance in one way or another. Not all of these companies are built to turn into billion and trillion dollar companies, and they're going to be like on the front page. Some of them might stay small forever. Nevertheless, their financial product offering is really, really important to them and their customers. So even without having so the question on stage about my answer was that usually like even without having, let's say, like the what is it, the Sun or the Daily Mirror kind of like front page news about an open banking or embedded finance use case, even though still there's a justification for doing all these kind of things. And like for my examples in embedded finance, again, I'm looking a little bit more here on the European side, but lending, I think you mentioned already Amazon and Square, of course, a little bit questionable if it's embedded finance or not. But again, it doesn't really matter. What matters is the, let's say, the ease of consuming financial services. I think any kind of company that's similar, we mentioned Shopify. I think restaurant platforms, we have like Volt or maybe DoorDash or similar kind of providers. This is also a very, very obvious one. On my podcast, I just interviewed the person from Volt who was doing the financial services here in Europe, the regulated activities. They're doing lending and payment. And I think from these 5 financial products I mentioned before, lending for like digital platforms, marketplaces is a very, very obvious one. And it's can be also like very, very niche, right? So I'm probably going to record a podcast very soon with a company that is a marketplace for jewelry. B2B marketplace where basically you can buy specific stones or expensive diamonds and these kind of things, and not in the B2C segment, but in the B2B worldwide trade. And they basically embedding a lending product into their solution, or they have embedded a lending product to make it basically easier, the whole purchase thing, right? So this story, I don't know, I'm not in the jewelry business, you might not be in the jewelry business. We will never have heard about these things and we don't care in quotation mark about it. It will probably never become as big that we read in the fintech world about it. But still, it's really, really important and crucial to them. But again, like lending is a really, really big one. And I think the other one, I mean, bank like lending is a really, really big one, but then typically another one which is having a massive impact on companies doing it is payments. I mean, we spoke about Shopify. Shopify is not only doing the lending product, Shopify Capital, but they also handle the payments, right? Where they basically make money for all the purchases that happen through their customers, right? And this is an example. I mean, if I take another example for the payment side. Specifically also in the vertical SaaS space. There's a company based here in Europe or in the Netherlands, but it's also operating globally. It's a company called Muse. Basically, they are a vertical software as a service company for hotels. So hotels all around the world use them. And vertical SaaS is like one industry software where you aim to replace all the other software your customers are using. So the hotel should ideally only use Muse for everything and anything, like from customer booking to interaction to everything, basically the technical backbone for them. And they initially didn't do payments. And then at one point they realized they have to do payments themselves. Earlier, they partnered with different payment providers, and the experience was always very broken and very unsatisfying. And that's basically when Muse started to partner with Stripe and basically build everything in-house. And by now, when you go to a hotel that's powered by Muse, obviously you wouldn't really know because Muse is just happening in the background and you only see the hotel brand. But if you do any kind of payment there, be it the booking before on their website or the restaurant, the bar bill later through a POS, everything goes through Muse. And Muse basically takes, let's say, a cut out of them, right? I mean, Stripe charge them X, and they charge the hotel X plus a little bit more. And they, from I know, this is a company is valued more than $1 billion for a couple of years by now already, and they make more than 50% of their revenue with financial services. And they started with payments, and I think there are two very common playbooks. If you are in the marketplace digital platform kind of model, very often maybe also payments, but very often also lending is the first one you offer. Basically, provide like merchant financing. If you're in the vertical SaaS place, then very often it's payment. It's the first one. So Muse is one example for a vertical SaaS, but there are like dozens more who basically started with a payments product and then later on added lending, banking, and so much more.
Okay, so that's a very good examples, really. I just wanted to continue this exploration of like best cases of embedding finance into verticals or horizontal business or vertically integrated businesses. There are really good examples in Central Asia. For example, there is a company called Kaspi Bank, which is probably $20 billion company traded at London Stock Exchange. That started as a marketplace, but then launched a bank under and payments underneath. So basically, when you go to Kaspi app, you may first like have like Amazon type of experience, but then you go into like payment. You can just order a credit card, take a loan. So they have a banking license. It's a licensed bank, but they started as a marketplace, and then they evolved as a payment vehicle, as a buy now, pay later, and many other products like a classical bank. So basically, they're not doing like only niche, like only payments or only cards. They do a full scale banking, but with the marketplace first experience. And there is another company which popped in my mind called Ozon, which is Russian largest marketplace, like Amazon, which is like 25 years old company. Recently, I think maybe 5 years ago, went public, doing really extremely well on a very competitive market in Russia. And they have really recently launched a bank, just a full-size bank. They acquired the license. In Russia, it's allowed, like in Kazakhstan or many other places. And they really started building up like banking experience for their customers on a completely new notion, right? Where customer has the first marketplace experience, buying products, buying travel, buying whatever. Likewise, you buy on Amazon or Shopify, and then you are offered all sort of different banking products. So that is truly embedded, but it's like the full-size bank. But I also see like banks doing an opposite thing, especially again in the developing world more than in developed world. When it just going like from like banking to like conventional marketplaces, where you can just through the bank app you can go and rent a car, or you can do travel, or you can buy goods, services, whatever it is, right? So there is like two-directional basically way of like interacting, right? Banks are trying to become everything but banks is underneath, and everything but banks are trying to embed banks into their own like home services. So who you think will win in this competition? There will be banks who will take over the rest, or there will be the rest who will be taking over the banks. I totally get you that embedded is, I mean, why we say that every company will become a fintech company, because eventually payment is that where you end up. I mean, it's just at the end of the contract cycle, right? First you look, you think, then you negotiate, then you buy, and then you pay, right? At the end of the day, then somebody receives money and somebody gives money away. So and you just need to exchange this like wallets, if you will, right? This money, and then again you start using this money somewhere else, right? So there will be some conversion happening here. But my question is, who is going to win, you think, in this competition?
I mean, crystal ball, right? Like who knows who knows this will play out, right? Like my assumption, and I guess it will not surprise many here of the listeners, is I think the non-financial brands have a better chance of embedding financial services than vice versa. And my thinking around that is, I mean, the examples you mentioned. I mean, one thing that of course stands out is like they're all, it's like all they're like more in, let's say, in the developing world, right? I mean, okay, maybe not all of that categories of developing countries, but I guess what you understand or what you get out of it is like it's not really like Europe or the US. I mean, if you look at Europe or US, you don't really see banks doing something like this. I think, like, I mean, my wife is from India, so I'm kind of looking at the Indian market quite a bit as well. And I would also say banks behave a little bit differently over there as well, because when you're in markets where I feel like banks in Europe and maybe also in the US, they're about defending the current customer base, and they're not really in the thinking of like growing. I mean, they of course, they want to grow, but not really like, let's say, aggressively. In India, the situation is like there are new customers becoming available every day, because luckily people who are not able to consume financial services are now getting a little bit more have more money, and basically now they get interested for financial services, right? So banks have to be from the mindset a little bit more opportunistic and growing and so on. So, and I think in Europe, I feel like, and in the US, it's a lot more about defending the position and kind of locking customers in, still growing, but different mindset. And when I see banks in this like Europe doing something, let's say, in the direction of embedded finance, we're seeing now a few banks who start to offering invoicing or accounting products. So this is more like focused on like SMEs, and they basically, you can say, like the digital companies, let's say the invoicing, bookkeeping companies, the Xeros and what all the names are in Europe. They start to offer banking products, payment products, and of course, kind of replacing banks. I mean, none of them are so big that I think the banks is really like feeling threatened by this one provider, but they probably figure as well, if they get better and better at it, and if all of them are doing it over the next 10 years, we will probably lose some customers, maybe not all, but a good amount of customers. So banks doing now the opposite and embedding accounting and invoicing feature. I think this still makes sense. I think the typical challenge for banks doing embedded finance, meaning in that case offering non-financial products aside of their financial product, is banks serve a very, very broad range of customers. When I'm used and I'm focusing on hotels, I'm adding financial products. The financial products are commodities. Like, there's not really a difference like that financial product or that. Like, payments is payments at the end of it. But if I'm a bank and want to now offer I want to offer now a software for landlords to kind of provide the experience of like this. I only have a very sub-segment of my customers are actually landlords. So does it make sense to build a financial product for like 0.5% of my customers? Probably not. And if you continue with that, it gets a lot harder. I think that's one reason. And another reason is, and I think that's not a surprise either, a license is not really an enabler of innovation, right? That's typically rather something that's holding you back. I mean, that's negative in the digital world, but you can also argue it's also good sometimes that companies who are regulated are not as fast maybe as other companies, and there are more restrictions on them. But again, I think banks, they have their mindset, they have the limitation of serving a lot of different customers, but also thirdly, they tend to be a lot slower when it comes to new product development, new innovation. So I think it's just naturally that non-financial brands will have it easier to to do the whole thing than a bank. But again, that's my personal crystal ball, and I guess every listener out there will also know that I'm a little bit biased to the things that I'm doing. I think that's applicable to all of us. But yeah, that's my rationale basically behind there. Why I think those are more likely to win.
And then a quite obvious question: if your point of view is right, and banks are going to lose to say real economy companies, being it service companies or product companies, industries, different segments. So banks will inevitably start losing the market share, right? Because they will start losing businesses. So if your view is right, in like 10 years, 20 years from now, whatever, there will be more and more embedded finance into whatever businesses, right? And they will take over. So what banks will be left to do? So what is the future of banks if embedded finance will finally win?
The important thing that we have to keep in mind is like that any embedded finance or fintech product is always powered by a bank, right? So what you're referring to is most likely the high street banks, the incumbent banks that we all know and that we maybe back in the days in quotation mark like went to in a branch to consumer financial services. We still need a regulated company for offering bankings or lending or other financial products, right? But obviously that's changing. My theory around like the impact of embedded finance on traditional banks is, I would say in, I don't know, every country, every jurisdiction, there's probably a handful, maybe even one or two, depending on the market size and focus, banks who have an opportunity to turn themselves into an enabler, to turn themselves into an infrastructure provider. So we are, I mean, again, like here, European example, we're seeing NatWest in the UK, we're seeing SEB, a Scandinavian Swedish bank, who both have in different ways launched their banking as a service activities and enabled other brands to offer financial products, right? So by now, or today in Europe, most of the, let's say, banking products, cards and accounts, most of them is actually powered by startups, by banking as a service providers who are venture funded startups. They're typically a little bit lighter on the licenses. They have something called an e-money license. They don't have a bank license, but it's completely sufficient for bank accounts and cards. But I mean, and I've worked for one of these companies back in the days as well. What I can tell you is as well that brands, non-financial brands out there, are very often very eager to offer financial products, but they really want to do it with a household name. So if an HSBC, a Deutsche Bank, banks like this, if they offer really good infrastructure products for non-financial brand, which also takes over the license and compliance part, this can be extremely, extremely attractive. So I think banks here, the biggest challenge for banks is obviously, I mean, for as usual, is in a way, of course, technology. But I think the even bigger challenge that banks have to overcome for those banks who want to go down that road is the strategic angle around that. Because in a way, you empower companies that compete with you. I mean, there's if you take the example of SE, sorry?
Yeah, it's called cannibalization. Yeah, that's what
Exactly.
banks and nobody really likes to cannibalize your own business, right?
But we all know from, I think it was Steve Jobs, right? Like it's rather you than somebody else who's doing that, right? But the example, I mean, like SEB Embedded, the Swedish bank, right? They empower a Swedish retailer to come back to retailers again to offer a banking product, right? And obviously these customers who use the banking product from the Swedish retailer, they don't use the SEB directly anymore. So probably the SEB makes a little bit less money, or definitely makes less money with consumers through this retailer than if they were banking with them directly. On the other hand, this is perhaps also maybe for retailers not so much, but this is for other areas where the trend is going, right? So I think, again, depending on jurisdiction, depending on exactly financial product offering, country and so on, there are a few banks who have a chance to really become the enabler. And I would argue that banks who are doing it successfully, it's not like they're going to shut down their direct-to-customer offering on the same day or very soon afterwards. I think this direct financial offering from banks will probably, or in most cases, to stay for a very, very long time. I think not every customer always wants to have financial products like embedded all the time. It's about customer value, customer benefit. But I think it's an really, really, really big opportunity for banks to go into that direction and be the first one. Because I would argue, in some markets, if you're not the first one or the second one, there's no room for like 7 or 8 players like this, because as an enabler, you're a little bit invisible. So you don't need 8 different brands doing it. You're doing maybe 1, 2, 3, depending on features, and that's about it. So as a bank, I would rather start that like early and understand my opportunities instead of like waiting too long and seeing what the others are doing.
Okay, and now we come to the question of whether banks are ready to. And you rightly said that banks are very slow. I mean, their technology are mostly outdated. And in fact, banks were almost the first industry in the world which got this almost ultimate complete automation back in like 80s, 90s, right? And they stay with this legacy infrastructure. So it's hard to change. I remember the biggest problem during this COVID time in banking was that the whole infrastructure is on-prem first. And second, in order to build it like in cloud, you need to redevelop certain things in COBOL. The language is like ancient Egyptian, like forgotten language in software development. And all these platforms have been written in COBOL. And it was really hard to find software developers to help to like tune the systems to be able to work remotely. Not even talking about embedded finance, right? Embedded finance needs a lot of APIs, a lot of checkpoints, cybersecurity issues. So when you let someone go into your infrastructure, you need to be agile, you need to be very flexible, API-based, cybersecurity, top-notch data lakes and all this, right? So it's really hard to build. So other good banks you would advise, if you like can speak of like real examples where banks are ready to adopt this infrastructure, this ready for embedded finance and welcoming customers in embedded finance opportunities.
I mean, as you said, right, it's an incredibly complex and broad topic. So I would say, first of all, what we should keep in mind when looking at this thing, there is bank is not like bank, right? So if you let's even take out the maybe the neobanks and the startup banking offerings and only look at the banks who have been around for a couple of decades, even for them, you have some who have probably invested a good amount of time and effort into technology over the past. Maybe not as much as the pure digital companies, but still more than competition, right? So I think companies. I mean, I'm not going to say they are perfect banks when it comes to technology, these kind of things, right? But like here in Europe, banks like ING, BBVA, they, at least at times, I mean, they've also done their bad steps, but at times they have shown that they have the mindset and kind of describing themselves as technology companies and everything around there, right? So I think there are some banks who have an opportunity for that. I would say with everything else also, it's a journey. It's not like, okay, you do one thing and it's done. I think it's about understanding who your customers are, understanding like who's your ideal customers, who is how are they using you today, why. I mean, I think the challenge for banks is very often you have to come out of your typical silo, right? I mean, a bank is a bank because it was is a regulated industry with high entry barriers. So you only focus on financial services. And quite frankly, banks could be very, very bad service providers, because what else you going to do, right? You were kind of like, you were accepting that your bank treats you like shit, in quotation mark, because they can do it. Like, what else are you going to do, right? You can do the other bank, which is exactly the same, and there's no difference, right? I think with breaking down of entry barriers, making it cheaper to build fintech companies, with regulation that's getting more innovation friendly, step by step, not like changing from one day to another, but step by step. There is now a requirement on the bank to stop thinking about like just like, okay, we are a provider for everybody, for bank account, for loans, for insurances, and so on. And it's understanding a lot more who are our ideal customer profiles, who do we like really want to serve, and how do they behave and how they think also outside of the bank, and how does it translate at the end of it to their banking activities. Because if you are, for example, if you're serving business customers in a specific industry very much, you should understand like what kind of software they're using, what is happening in their industry, and so on. Because maybe they're not leaving you right now, but if these companies are using the software companies they're using, if they build more and more financial services, this will impact you one way or another, right? So my suggestion here is for sure for banks to, I'm not sure that every bank, or I'm definitely going to say like not every bank needs to become like an infrastructure provider, a banking as a service provider, but every bank should definitely explore these possibilities. There's also like different variations of how you become an infrastructure provider. You don't have to be like the long-tail Stripe kind of company who works with everybody and anybody. You can be also selective and become an enabler and a partner for companies. I think any bank should invest at least some resources in exploring it and understanding it. And I think everything else that you mentioned around like technology and so on, I mean, even if you're not doing embedded finance, you should probably still invest and get better at that, right? Even if you stay like direct to customer, that you have to build better digital products, higher security, becoming more flexible, more agile, be able to react faster also to cybersecurity threats and so on. I think this is definitely happening or necessary even without embedded finance.
Let's do a thought experiment then, Lars. So I'm a large European logistics company. Let me become a logistics company. Working in Central Europe or in Western Europe, doing a lot of logistics business with small and mid-sized and large company. So I made a decision to have an embedded finance products for B2B. So I need a banking partner. Whom should I go to? How to find this partner? So should I just build it all myself, but I don't have a capability to do it, neither license, no knowledge, but I just have a feeling that I can make really good bunch of money doing this myself. So what's next? So I hired Lars.
I just really come to me and speak to me.
What's the bank to go with? Give me two names.
I mean, it depends a little bit. It depends on quite a few things, right? So first of all, I mean, what you said, going the decision for your like building it yourself, becoming like regulated. In that case, it doesn't sound like an option at all. I would always argue when companies ask me, should I go for my license, yes or no? If you're asking me, then it's probably a no. Like if you are not like 200% convinced you want to be regulated, you want to go down that way, then you should definitely not. And even if you're 200% convinced, you should probably still talk about a few things to understand if you're really understanding what you're getting into, right? So I would probably say that in almost every case, only those should get regulated who are offering financial products already through a partnership model today and understand how their customers want to use them and how to build it. Because the biggest challenge, I mean, getting a license is one thing. I mean, it takes time and it's very expensive, but then also building the right product takes time as well. And you're better off to first experiment it with a partner, validate that, have success, and then perhaps at a later point of time to turn the customers over to you and doing all of that.
I want to have a name.
Do you mean banks or?
Yeah.
Yeah, I mean, it depends.
Maybe fintech partners. I don't know.
Yeah.
Or the best in Europe.
So, for example, right, you said embedded finance product for a logistic company, right? So, of course, embedded finance, again, can mean like multiple things. But let's say for a logistic company, serving maybe it's more of a platform, like a digital player.
I want to do factoring. I want to do like leasing. I want to do credit lines, advanced financing. payments.
So, I mean, I would probably, I mean, there are, again, country specifics, a lot of details, but a couple of names. I would probably go to like banks, like from like Deutsche Bank to BNP, maybe even Santander. Some of these
They
names
are able
are.
to do it. Yeah, they are able to help me. So they have embedded finance people who understand what I'm talking about, right?
They
So
definitely.
they are ready to like contract with me, and they're ready to provide me with some offer at least, right?
Yes, I mean this is the thing, right? The challenge here is a lot around. These are the names that I mentioned. These are not banks who work with anybody in quotation mark, right? So there is if you kind of look more at the and again, we were mixing a couple of different financial products here, but like if you look at an SAB embedded or maybe like I mean they're also a little bit selective in terms of like size, I guess. But I would say like there are companies who really brand that, who really have a unit out there which they call like embedded finance, banking as a service, and they probably are a lot more open to work with a wide range of companies. The banks that I mentioned right now, there's also the challenge for a company like this. You have to find the right person. There's not like one department that you go to and they're very happy schedule a call with you next week and guide you through the process. You have to find the right person. You also have to do your homework before. I think that's also something for any bank you reach out to. I think you have to do your homework and understanding what you're trying to build, what the regulation is. I mean, you don't have to become an expert in all these things because you are not really the expert. But if you just like, I just want to do it and you figure it out kind of mentality go into discussion, then you will lose as well. What you have to do your homework, understand a little bit about the requirements, who can help you, and then go out there and talk to some of the banks. And to be honest, if you're not working with, let's say, a person like myself, it's also this will take considerable time to kind of find the different providers, right? You probably start with first two names, and then you speak to more people, and then 3, 4, 5 months later down the road, you kind of starting to understand the bigger picture, and you understand. In this case, again, if you're not regulated at all, if you cannot onboard your customers, like you cannot do your KYB, it will get a lot harder to work even with the banks that I mentioned before, because they are not really like, most banks try to avoid to do the KYB themselves because it's very expensive. So they rather want to work with companies who are at least partially regulated, so they can hand over some of these aspects.
So from that, I understand embedded finance is still very complex thing to approach, right? It's not.
I think it would always.
It's not a plugin. It's not like, okay, I want to do embedded finance, so
Done.
I just plug thing into my socket and then it works. It's not like that easy, right? So you just need to consider so many things. Every solution is tailor built. There is no one single kind of framework. You just need to assemble a lot of capacity from the bank and from the partner to like build it in the right way. So it's not like fully automated kind of infrastructure where you can just do it yourself, right? I mean, if I'm a developer, software developer, and I want to embed payment, then I just simply take a piece of code from Stripe, I'll put it into my code, and then my checkout is there, easy, right? I don't need to think. I mean, it's done, and then every credit or debit card in the world you can pay through my checkout. Right? That's it. So if you think of embedded finance for a business, you just need to assemble a lot of things. So it's like a big project, like very complex. And probably this is the reason why many of them really failed, right? Because it's like not an easy thing to build today in today's world.
And again, I'd like just a reminder as well to like what I said at the beginning, right? At the end of it, like embedded finance, you have like 5 financial products here on this side. So if like embedded finance again is like 5 different products: payment, banking, lending, insurance, investment. Very, very different. And then on the other side, you have like a lot of different industry if you only focus on the B2B thing. And now you combine like payments with logistics or banking with hospitality, right? There come a lot of like different factors. On high level, okay, offering payments, even as an embedded payment approach is maybe pretty much same in some of the industries, but then there's more factors coming behind it. You're in that industry, so international payments is very important. You need to pay out to people around the world, not just in Europe. That gets like more and more complicated, right? And there's like new stuff happening. So I think the takeaway here is like it's complex today. I don't see it getting like much easier in the next 10 or 20 years. I think more providers, more specialization will definitely help, but it's still a jungle, right? I mean, of course, it's also one of the reasons when I left my last job, I kind of thought, okay, I want to become like an embedded finance advisor. And my reason is I was selling embedded finance products and I was speaking to a lot of companies out there. And I just saw how lost many of them are because they're not understanding. I mean, you and me, we are in the fintech world. We understand these things. We know people. We can like call people. We can get answers. We can get all of this. But if you are no idea, you maybe have one friend who maybe worked at an N26 before and you ask that person for anything, that's basically your only foot in the door, right? And this is like a long way to figure out. So some companies doing it takes a long time. But yeah, there are also shortcuts available.
Okay. So I have only a few questions left. So my first one, there are obviously companies that like a new fintech companies that only target building infrastructure for embedded finance.
Mm-hmm.
One of those companies, at least successful cases, is Marqeta in the US that built an infrastructure for credit card processing. So you can actually do your white label credit cards on Marqeta, which is a plug and play infrastructure more or less. So you can define and build in and just basically plug in your services and start issuing your credit cards or debit cards, whatever you want. So other good cases you can name here in Europe, in the US, or in Asia, companies that built and scaled up embedded finance infrastructure for whatever third parties. So banks are complex, but there are only embedded finance infrastructure players. If you can name and define the future of them, you think it's gonna like grow? And I mean, you and I know a lot of failures in this market, right? When startups tried hard but didn't find the way to go because they're in between, right? They don't hold a license, so they are not banks themselves. They could not provide service. They have to stay in between those who want services and those who provide services. And it's a hard place to be, right? Because you have a complex banking infrastructure on one side and a complex industry player infrastructure on the other.
I mean, the infrastructure provider, it's I have like my own little cheat sheet, so to say, my own like database where I track like the different providers, again, like focused here on Europe specifically for like payment, banking, and lending. I think just for banking, it's something like 30 names or something like this. So there's but it's Europe, right? I mean, this means also, obviously with passporting, you can cover a lot of different European countries, but then very often you want local bank accounts with a local country code at the beginning. So there's a lot of like different, let's say, flavors in there. I think if you look, just to give you some names, like if you look at the venture funded banking as a service provider, if you are in Europe, like in the European Union, then I would say with Solaris was big once, but has lost a little bit. I think the most relevant name today is Swan, from headquartered in Paris in France, but who operate who have an office in a couple of European countries. Then in the UK, you have Griffin, a fully regulated bank, so more like of a Solaris approach that offers infrastructure services for fintechs and non-financial brands. That's on the banking side. Then on the lending side, you have like ULend and Ivoca and Banksware and many more who offer like embedded lending products. If I go to the US banking, I think Unit.co is probably the one that's still from my perspective at least, a little from a distance here, but who is having a lot of the embedded finance story points and talking points around there. I think what I said before, what we spoke about before, right? Like potentially more banks hopefully coming into the game is not really making it easier for these providers, because this could, I mean, to be honest, we have seen it here in Europe. We have seen, I mean, at least one case now. I mean, actually two cases. The other one in France with Trésor is a little bit some years ago, but we have seen UniCredit, Italian bank, buying Vodeno, Ion Bank, which is a setup of a banking as a service provider. So we're seeing it happening. There's a case maybe for this doing it even more, but again, this needs to be like a bank who has this kind of like mindset full-fledged on their strategic roadmap, right? I mean, it's probably a bank who at least tried a little bit themselves before buying such a provider, because if you buy this provider without having done any steps in this direction, this sounds like a big mentality and strategy gap that will happen after the acquisition. And those companies who are doing well, I mean, you kind of don't want to acquire a provider who is struggling and who is going down. Obviously, you want to buy one who's going up. They're also not going to sell for cheap, right? And this is also an important factor in there. But I think the enabler space, I mean, I find it incredibly fascinating because these are basically the companies who enable this kind of like trends and things. It's incredibly complicated as well, this space, because building these products takes quite a bit of time, and then you get feedback from customers. You have like one layer in between. You don't learn from your customers directly. Your customers have their own customers, so it takes time as well. All of that, the feedback cycle to iterate, to improve the products. But at the end of it, these providers are the reason embedded finance is happening, because most of these companies cannot do it without them.
Absolutely. So my last question is about big names with billion consumers or more. We have Meta with its Facebook, where they tried to build this embedded finance on blockchain. Regulators didn't allow it to happen. Telegram, which reached 1 billion consumers, is now building its famously known TON blockchain payment and FI vehicle under Telegram, basically within Telegram framework. We have XAI, which you remember this long-term vision of Elon Musk for a previous generation of XAI, which was PayPal, was to build the world's largest financial ecosystem. Do you think that this will mature? We have another company, TikTok, which may become one of the largest embedded finance players for consumer and businesses. Do you think that this kind of large place will get into something real big? I don't know if there are any plans for now to convert the XAI into this financial ecosystem, but certainly for Telegram is. Do you think TikTok may get to one of this place at some point? So what's your prediction?
It's a good question. I mean, to what I said before, from my personal view, if you exclude buy now, pay later a little bit, which obviously was, or maybe still is, like a massive, and you can call it embedded finance product, kind of like offering like financing products at the point of purchase. But other than that, from my perspective, like the biggest activities in embedded finance are on the B2B side, focusing on other businesses, not so much on the consumer side. I think the reason for that, or my understanding for that, is that it's a lot easier. There's this magical customer value that I spoke about earlier, 1 + 1 = 3, where like the combination of the two things gets much better. I think it's just a lot easier in the B2B world, because businesses tend to use at least one software, sometimes a few different softwares. The financial part is a part of that in one way or another, right? If you're using a bookkeeping tool or maybe an ERP or something, like the finances, even without embedded finance, is still somehow already part of it. With TikTok, I see a little bit of the challenge. Like TikTok has nothing to do with your finance. I mean, maybe if you sell through TikTok as a business, and then of course you have your sales through TikTok, then maybe that's then some touching points with finance. But as a user, there's not so many touching points with finance. So it's a little bit harder. I mean, obviously, I'm also maybe now not really in the TikTok generation anymore. Maybe the next generation, my children at one point will think differently about that. But I think this is typically a challenge. I think the the consumer brands that have proven that they can build successful embedded finance products. It's always a little questionable for this brand how much embedded finance it really is, but like Starbucks is obviously a company that is known for having like more money from the customers in their accounts than some of the US banks. And I think loyalty here is a really, really key aspect. So companies who, and especially coffee chains, right, where coffee is kind of addictive and a regular purchase and a nice price point. This is obviously an interesting element. So companies like this, I think, have a good opportunity to build such products. TikTok, yeah, I mean, if you don't put a timeline to your prediction, then also TikTok. In the next 5 to 10 years, I'm not sure if this can take off.
Okay. That sounds like a good resolution of our podcast. Thank you so much for being with me. So this was Lars Markull, an embedded finance specialist who helps companies to design and launch financial products, embedded financial products such as payments, banking, lending solutions. And we discussed today in depth embedded finance, past, present, and future. Thanks, Lars, for being with me. And this podcast was brought by R136 Ventures. It's called Ventures from the Valley, and I'm Victor Orlovski. Thank you so much.
Victor.
Ventures from the Valley is brought to you by R136 Ventures.
To find out more about R136 Ventures and how we scale mid to late stage startups by unlocking their true potential through investment,
visit r136.vc. We'll be back soon. In the meantime, make sure to click and subscribe so you don't miss any further episodes.
On behalf of our team here at R136 Ventures, thanks for listening.